Welcome to Unit 3, the introduction of cycles and market phases. All right, everyone. So we were lucky enough as traders to have three distinct figures in history that sort of paved the way for modern technical analysis that I respect and give credit to. Charles Dow, Ralph Elliott, and Richard Wyckoff. They all lived in the early 1900s, and they sort of started figuring out market structure. And I like specifically Wyckoff's model of market phases. I only borrow from his knowledge of three distinct phases because I like the Occam's razor approach. Whatever is simplest is usually the best. The theory asserts that there are major market trends, and they're composed of three phases. You have the accumulation phase, a trending phase, and a distribution phase. The accumulation phase at the bottom here on the chart is phase one, which is where investors in the know are actively buying stocks against the general opinion of the market. So during a down move or a downtrend, investors that are in the know or the smart money are starting to accumulate shares and are starting to buy. So during this phase, the stock price doesn't necessarily change an awfully great amount, but basically the minority are buying and they're absorbing all the stock that's being sold. So people are panicking and the minority of people are buying from the majority. All right, so eventually people catch on, if you will, and the price starts a trending phase. As it's trending, there are, I guess people are, if you have euphoria or enthusiasm, etc., and then profit takings begins. And again, those same individuals that were buying in the accumulation phase are starting to realize that it's time to start getting out of their positions. You begin the selling phase or the distribution where profit taking is occurring and they're preparing for a move down, which then is followed by a move down or another trending phase, only to be repeated by another accumulation phase. And this goes on forever and ever. This is the three distinct phases of market trend. And that's really all I want you to take away from this lesson is the topic and the idea that markets are cyclical in that they share three distinct phases in their price movement.